MT Media was established in 2007, and we are specializing in education-based marketing in the form of a wide range of educational videos in multiple languages that can be implemented in the Bulkers website. Now, our motto is education-based marketing is built around educational messages, which replaces sales messages. Educating prospective clients will help them to convert and stay longer in your business. I'll propose an answer to that question. The question is how education may encourage visitors to convert. I think it's exactly like a relationship building between two lovers. Everything will be clear in a minute. In a relationship, there are stages. The first stage is attraction. We are looking for specific characteristics on the other side that attract us. Then there is bonding. We are getting to know each other. We are building trust. And then, in the right timing, and only in the right timing, we are proposing. And if the proposal was done right, and in the right timing, there is marriage. And that, of course, it's not over now. It's not over yet. We have to maintain our relationship. Now, let's go through the first stage, attraction. We must offer something that the trader wants, and we are selling a chance to fulfill a dream, or in our market, a chance to earn a lot of money. Now, this must be done with educational course where the broker teaches the method of how to earn a lot of money. Now, of course, it must be enhanced in superb presentation. Every page should look different, and educational centers can be presented in multiple layouts and colors and designs. And in banners, education will always be a good idea. And not to mention landing pages where you're offering free educational course. Now, in order to communicate, we have to speak in a common language. And therefore, the education must be in the trader's native language. Now, let's do a short test. I'll show you now a movie, and then I'll ask you a question.
不赔本的交易，这个不在我们本课的讨论范围，原因只有一个。
Now, if someone in the audience can understand what the nice lady just said, please raise your hand. Well, no one here in the audience. Now, let's do another try.
Как торговать, никогда не теряя деньги? Эту тему мы, пожалуй, обсуждать не будем по той простой причине, что нет возможности торговать, хотя бы иногда не теряя деньги.
All right, if now someone can understand it, please raise your hand. All right, I see some hands here. And see how happy they are to find their native language. It's very important to them. And remember, we want them to feel at home. All right? And although it's possible to trade in English, and many foreign speakers are trading in English, it's very hard to learn a new subject in a foreign language. Now, the next stage is bonding. In this stage, we don't have much time. We have to be fast. And we must show that we know how to make money. And we need to promise that we'll teach how to do it. All right? And this is how it can be done. This is a website. And over here, we can go to the educational section. And in the educational section, everyone can choose the course that fits his experience and knowledge. And then he will choose the right lesson. And he can start learning. Let's see an example how it can look like in real life.
Hello and welcome to our course. Before driving a car, you need to learn how to drive. For exactly the same reason, before you can begin trading, you need to learn how to trade and get to know the market. What is the market? What gets traded on it? What influences market movements? And how can this knowledge be translated into money? In the next lesson, you will learn the basics of the fascinating world of trading.
All right, so this is an example. And of course, it has to be include interactivity. Since we want the trader to feel comfortable and we want him to be engaged, we must make him part of the education. And therefore, it's very important. Let's see an example. We'll now see a short video about what is support line, and then I'll need your assistance. If you think the line should be higher, just say higher. So here goes.
The support level is the lowest price level that the market has reached. When a trough is repeated several times, a straight line can be drawn between the troughs. This line represents the support line. The resistance line is the opposite, a line that passes between the peaks reached by the market. Find the support line.
All right, so now we are asked to find the support line. And if you think the support line is higher, please say higher. All right, I think it's higher. Now let's try again and then move it higher. And do you think it's here or higher? All right, yes, it is higher. And what about now? Is it here or higher? Yep, and I think so too. Let's see if we did it right. Yes, we did it right. So being part of the education helps you to feel engaged and to feel that you are part of something. Now, another important thing is that you don't want to promise something without showing what it is. And therefore, it's important to allow access to the content, to the educational course, before the registration. And then when the time is right, only then you need to ask the trader to register. Now, let's see an example. We're jumping into the middle of the lesson, and then the broker will ask us a question.
The price of gold has doubled over recent years from $325 to $1,300 and is even higher today, providing investors with handsome profits.
All right, now the broker asks us a very simple question. Would you like to proceed? And the only thing the trader needs to do at this stage is to say, I do. All right? Now, the proposal can't be on your first meeting since you don't know each other. And you can't wait too long since the other side will go with someone else. All right? So the timing is everything here. So why now? It's the perfect timing. Well, we have promised vital knowledge, and now the trader is curious. We provided good advice, or at least promised a good advice, and we show that we know how to fulfill that promise. And now the trader feels comfortable and feels that we are reliable. Since we are on his side, we are teaching him how to do things right. And of course, now registration is easier. Now I want you to take a minute and explain about that. Let's think about a casino, right, which is totally unrelated to what we do in Forex and binary options. Let's think about a player who comes into the casino with 10 grand, and he's just losing round after round after round. Obviously, after a few minutes, he would get up and leave. However, if the same player is winning few trades, losing few trades, and then winning back, and then losing, and after a few rounds, he's left with just 1 grand, the right thing to do will be to get up and leave. However, in many cases, we'll just stay and try to win back. And in psychology, it's called cognitive dissonance. Now, in our case, it's exactly the same. If the trader went far enough with us, it will be easier for him to register. The next step is very easy, just as 1, 2, 3. And after that has been done, we're not over yet, as I said. We have to maintain our relationship. If the trader is educated, things are easier. He knows how to do things. He can understand that sometimes he will lose money. And when times are bad, we must help the trader. We must show him that we are there to support him and give him tools that will make them a better trader.
Another important way to reduce risk is to distribute your investment over a broad range of trades. Proper rational management of your finances, including a distribution of your investments, will make the difference between a successful investment, which can be managed over time, and a failed investment, which will clear out your investment portfolio in no time. Proper capital management will preserve your capital over time, enable you to trade more calmly, and greatly minimize the damages you incur during losses, which are an inseparable part of trading.
Right, such video can be given to a trader who just spent everything on one trade. Now, automatically, he will think again. All right, so let's summarize. We gave a good attraction, and then we got to know each other, and trust was built. And then, in the right timing, and in the right timing only, there is a proposal. And then if the proposal was done in the right timing and in the right way, there is marriage, and then we are maintaining our relationship. And if everything was done right, you live happily ever after. Now, we in MT Media, we are specializing in converting visitors into clients through education. And we do that with unlimited ways of presentations, educational courses in more than 25 languages, interactive features. We can help you to do it right, to do the education right. And we are working with the market leaders, and we now know how to do it right.
Good afternoon, everybody. My name is Andrew Ralich. I'm CEO and co-founder of a company called 10 Financial Systems. For those of you who are not familiar with 10, we create trade routing systems, bridge and STP solutions, primarily for the MetaTrader 4 platform. What I'm going to talk about in the Innovative Solutions panel today, about a bridging industry that's been around for 4 or 5 years now, is where the industry really came from, what's created the marketplace today for STP bridging, new trends that we're seeing in the STP space, and some predictions of where the space is going to go over the next 4 to 5 years. So, rewind back to the FX industry pre-2008. We had primarily a market-making mentality amongst retail brokers. Many of them were booking trades. Some trends began to start, mainly due to regulation coming out of the US and Japan. We started to see a move from what many people refer to FX as the Wild West to a more regulated industry with a lot more credibility. With this regulatory shift came a demand for more transparency to traders, came a demand for more consistent quality of execution and order matching, and thus came the concept of a bridge, taking a retail broker and allowing his traders through a platform like MetaTrader 4 to directly access the more institutional liquidity market that existed in a more established space. Also shifts between self-directed traders and managed trading, more sophisticated clients, led brokers to look at their revenue models and say, do I want to be booking all of this business? Do I want to be focusing more on marketing? And do I want to be more geared towards bringing clients in the door and leaving the risk management to other sources? And thus, these components called bridges came about, taking trades out from these retail platforms, bringing them up into the institutional industry. So a quick overview. This is the liquidity landscape, simplified, that exists within the FX market today. At the top tier, we have our banks, providing rates, standardization across the whole industry. These rates are disseminated down into an array of tier 1 or tier 2 PBs, some of which are brokers, other of which operate more as just credit facilities. And on the bottom here, we have retail brokers. Now, from a technology perspective, the PBs and the larger brokerages have been used to and developed to sharing liquidity with each other through a well-maintained and quite mature ecosystem of exchanges, aggregators, ECNs. Everybody's familiar with the Currenex, Integral, Hotspots, et cetera, of the world. And from a technology perspective, retail brokers primarily were using systems such as the MetaTrader 4 platform to access their clients. Now, as these trends started to come about, bridging came into place to allow these retail brokers to access this institutional pool of liquidity, allow these brokers primarily used to be booking trades to pass their trades up. Now, fast forward to today, we have over 22 different bridge providers out in the industry. Some of the ECNs provide their own bridges. But we've also seen an interesting trend of these retail platforms becoming something that some of the larger tier 2 and more established brokers are bringing into their ecosystems. And thus, some of these bridges, which were seen more as a retail utility, have been brought into the institutional space and exposed to an execution environment, demand for stability and reliability, and a sheer number of tickets that have allowed a small handful of these 22 bridge providers to establish relationships with larger firms and prove themselves in an ecosystem that's a little bit different than the retail space where bridging was originally born. Now, as relationships have developed between these Tier 2 and Tier 1 entities, they've actually worked with some of the bridge providers who traditionally came into a ECN or exchange environment to do direct bank integrations. And thus you're seeing a slight evolution within the bridge space that's very much worth monitoring over the next few years of providers who establish themselves in a less sophisticated retail industry but have proven their systems in working with platforms like MetaTrader 4 and doing it very successfully. Now, very recently, and has been a topic of discussion at this show, MetaTrader 4 has implemented their own bridging mechanisms that allow MetaTrader platforms to connect to each other. And a lot of people come to me and say, Andrew, what does this mean? You know, have you started working on your resume and are you looking for a job? The answer there is that for the lower end of the bridging market, these MetaTrader to MetaTrader 4 bridges have eliminated some cases where retail firms can now pass liquidity between each other. It looks very much like the aggregator and exchange infrastructure that was created in the institutional space 3 or 4 years ago. But if you follow the line, you can find that at the end of the day, these bridge providers do end up receiving the liquidity. The larger brokers who are using MetaTrader 4, even if the trades pass up, are eventually hitting one of these bridge technologies, and you will start to see essentially the cream rise to the top in terms of the type of providers who have produced quality solutions for MetaTrader that can continue to scale. In addition, a lot of what the bridge providers are hearing nowadays is what other options for platforms are there available. Differentiation is a very key term that comes up in how brokers approach their end traders. How do I change my front end? How do I look different? They're also looking at new platforms. And the bridge providers who have developed a flexible modular solution are able to handle multiple platforms. And the concept of a one-to-one bridge is getting somewhat blurred. So is there room for growth in this space? Not necessarily for everyone. The bridge providers that have entered the market late and are looking to continue to monetize a one-to-one bridging solution are probably going to face challenges by things such as the meta-to-meta bridge. The differentiators that exist for the providers and the innovators that will continue to flourish within this order management and bridge space are the ones who are bringing institutional quality features into their platforms, who are starting to resemble more of an order management system, more of an institutional platform than a retail piece of technology for retail brokers. There are also significant opportunities for innovation within this space in terms of asset classes, multi-platform, handling new trading systems within the same ecosystem that a retail broker that started on MetaTrader has learned to use as the backbone for his trading environment. So a very quick overview. 4 years ago, 90% of my implementations look like this. A MetaTrader 4 platform, an STP bridge, and an FX liquidity provider. Very quickly, brokers came to us and said, well, what if my primary provider goes down? I need a backup liquidity provider. I like my liquidity now, but I need a CFD solution. Now the bridge concept has built out into more of a bespoke system that, for the right providers, provides the broker a single source, a consistent execution environment for their clients, no matter if they trade on MetaTrader 5, MetaTrader 4, or multiple asset classes offered by the broker. In addition, you're seeing a lot of the bridges get employed, and this was brought up in the technology panel earlier, doing back office integrations, getting this retail flow out of MetaTrader into more sophisticated systems. It's a concept that we refer to internally as institutional adolescence for brokers. There are many brokers who start on MetaTrader 4, love the platform, love the way it garners clients, but need a better risk management system. And it's the bridge providers in the middle of this ecosystem that are hooking into more sophisticated institutional back office platforms. Other platforms are also coming about that are providing new opportunities across the board for brokers to differentiate their front-end environment, and in many ways, coming to the bridge providers who have already integrated into the liquidity and back office environment is a very easy way for these new innovative platforms to quickly enter a market that is somewhat dominated by a single source of accessing front-end clients. Another very important aspect, which I touch on the second slide here, is trade data. There's an immense, valuable amount of trade data that's been archived by bridges and order management systems over the course of the last 4 years. This information is now being used by brokers in combination with these providers to do liquidity management, exposure monitoring, reporting to their clients, and transparency out to regulators. And this will continue to be a trend amongst these plumbing and interconnectivity providers who, again, operate as an essential but behind-the-scenes piece to a broker's operation. One other component of bridging that we've seen evolve significantly, and I don't see too many brokers in the room, a lot of tech providers, but you may recognize this as the common risk management infrastructure for a retail broker running MetaTrader 4. Remote desktop into the system running MetaTrader, monitoring my rates from multiple different platforms, and editing settings through a somewhat cryptic and fairly difficult to use text input format. The bridges of the future and the technologies of the future for retail brokers are not going to rely on text-based input, almost coding the systems, but will have institutional quality GUIs, real-time monitoring of the activity of the systems that are going on, and this entire ecosystem that's now controlled and operated through this plumbing can be accessed by the broker the same way they're used to accessing their positions from their liquidity provider or their front-end traders through a CRM system. The last point I want to make about innovation within this space, because I think it's a topic that's of interest to a lot of brokers out there, asset class expansion into CFDs. We're starting to see a trend of liquidity providers looking to offer more in terms of CFDs. There's more liquidity coming. There's more options for risk management. There's still some complexities that are facing retail brokers in terms of concepts such as corporate action management and handling DMA regulations versus a more traditional OTC market like Forex. I believe that the bridge providers and the order management systems that will continue to exist going into the future will be able to adapt their systems to handle multiple asset classes and still provide that single backbone that then goes out to multiple platforms and provides that consistent execution environment. A quick example of that I don't think many brokers think of, there are a lot of brokers that allow you to trade Apple stocks on MetaTrader 4 or MetaTrader 5 right now. And there are bridges out there that will connect into CFD liquidity providers and offset your risk just as brokers are used to in an agency environment. One thing we have not seen as of recent is a very popular instrument such as Apple issuing a split or a massive dividend that needs to be passed back up to clients. The infrastructure consistently between these environments doesn't necessarily exist to handle this. The bridge providers who are going to continue to evolve with brokers and with the changing needs for asset classes and new liquidity are going to be able to give brokers means of handling things such as corporate actions. So in summary, bridges have evolved a lot within an ecosystem that mostly was garnered by MetaTrader 4 over the past 4 years. I think you'll see that the bridge providers who have succeeded within that environment in producing stable solutions, of which there are a handful of the total of 22, will evolve their platforms into institutional quality pieces of software that help a broker who started off as a smaller retail firm evolve into a tier 1 or tier 2 PB type entity. The key to this will be usability and flexibility and the ability to take this technology and use it across many platforms and many asset classes. You're not going to give me any time for questions. Thank you, everybody.
Hello, everybody. Welcome. So my name is Ilan Asbel. I'm CEO, one of the founders of AutoChartist.com. I'm actually not here to talk about AutoChartist. I think most of you know what AutoChartist does. We've been around the market for quite a few years. So what I'm actually here to talk about is general innovation in the FX market. And one thing that we all actually know about the FX market, and if you're a medium to large size broker, you will know that 80% of your trades are actually made by 20% of your clients. Okay, it's a fact that we all know about the markets. And yes, we're innovating a lot in FX at the moment. There's new trading platforms, copy follow systems, social trading, binary options, really a lot of innovations. But you know, we're so busy trying to actually make the 80% trade, right, by offering them gaming solutions. Are we actually thinking about what we need to do in the market to actually attract the large clients, the guys who are going to deposit $100,000, $250,000, even $500,000 to $1 million in the FX market? The reality is that there's not much innovation happening in that space, and that's really what I want to talk about today. So, you know, I was actually going to speak to you today about something that I call sustainable innovation, which is really innovation that stands the test of time and really becomes the norm in an industry. And as I was editing this presentation and going over it again and again, I actually realized that my presentation was less about actual innovation that's happening, rather more about what I want to see happening in the market. So really what I do when I analyze any industry is, and this obviously is true for the FX market, is you need to look at other industries, other more mature markets. Right? What has happened in the last 10, 15 years in the equity space? What has happened in the last 10, 15 years in the future space? And those are the markets we really need to go to find out what's actually ahead of us. So really the first thing we need to do, I think, and there's just three topics that I want to talk about briefly today. The first thing we need to do in FX is offer more efficient money management infrastructure for money managers. So really, I think the current PAM models just aren't good enough for serious money managers. They're very difficult and very costly for money managers to administer, and they potentially have very fatal results for money managers and their so-called fund. If any client decides to withdraw their cash at any point in time, it could affect the liquidity of the entire fund. So, I mean, in effect, I don't want to be, you know, I always use the term the nun at the casino door trying to stop people from coming in, but in effect, there really shouldn't be a situation where money managers are remunerated through volume, which is really the norm of what's happening in the FX industry at the moment. I guess, in the near future, it's not really going to change, in my opinion. I think many people are making too much money from this type of model, but I think certainly some of the regulators are making good inroads into disclosing certain cost structures. Certainly in the UK, in recent time, in the last month or two, the UK regulators have started to impose, let's say, not changes, but certainly regulations around disclosures that money managers need to make to their clients before actually managing their money. The second thing that I want to talk about today are margin requirements. And remember, again, all I'm doing, and you can see on the top right of that slide, I'm talking about that 20%. I'm talking about how we're going to get that 20% that's currently generating 80% of our volume, how we're going to get them to trade more, how we're going to increase that 20%. And really, we're talking about relatively high net worth, medium to high net worth individuals. These individuals, you know, you can tell them I can give you a 1% margin requirement or a 0.5% margin requirement, but the reality is that high net worth individuals can probably get financing at a much better rate than any broker can give them financing at. So essentially what I'm trying to say is as the market matures, you're going to naturally get a movement towards higher margin levels, okay? Because the guys just don't want to finance through the broker. The broker is giving them a worse rate. So I think it's just a natural progression. I also think that one of the things that is going to be demanded by the higher net worth individuals is really more transparency in terms of data, as was alluded to in the previous presentation. I think this could be argued, but I guess the gold standard in the industry at the moment, in general, is the data infrastructure that NASDAQ offers, you know, with the ability to replay trade by trade down to the milliseconds of what trades were executed. You know, when we get down to that kind of level and that kind of accountability, you know, that's when I think there's going to be a significant amount of transparency in the FX market. You're going to see a lot of high net worth individuals coming in. The third and last thing that I want to say in terms of innovation in this industry and where we should be seeing it going is really talking about client retention and client acquisition. So if any of you are retail brokers, you'll know that when you acquire leads, and if you've tried to acquire leads and email addresses and telephone numbers and names of people, the quality in the FX market is really poor. And when you actually try to make and phone those people, try to convert them into clients, they've probably been sold to 5 other brokers and they're really, really been overworked. And then the strange thing is that as brokers, you acquire these customers, you pay so much money and you acquire them and you work hard and you get guys on the telephone and you know, the industry norm, yeah, so you're I guess, it's costing you somewhere in the region of $200, $300, maybe even up to $400 to acquire a customer. And then what do you do with that customer? You give them a gaming product so that they lose all their cash, or you give them to a money manager who's going to lose their cash because he's remunerated through volume instead of through performance fees. You know, I guess my view on the market is that we're only going to see real sustainable growth in the market when we stop focusing on lead generation and actually start focusing on client retention and actually giving the retail trader a chance in the market to actually succeed instead of really raping him, for lack of a better word. So, yeah, there's lots of innovation happening in the market. Don't get me wrong, I'm not saying that it's not happening. We have, you know, binary options, we have social trading, we have, you know, copy follow systems, we have all kinds of different systems that are innovations in the market. But really, I guess what I think is going to happen in the next 5 to 10 years in the FX industry is that the real financial brokers are going to start differentiating themselves from the gaming brokers. And I think there'll always be a space for financial gaming. There's lots of big players right now in the gambling industry and online gambling industry that offer financial gaming. But I guess that if we want to start attracting the high net worth individuals, the guys that are trading a lot and giving us high volumes, we're going to have to start seeing some dramatic improvements in lower cost infrastructure, trading infrastructure, more sophisticated risk management strategies, as alluded to in the previous presentation, more sophisticated algo trading platforms, which is very important, with more visibility, more transparency of data, more level 2 information, even in OTC markets like Forex. And finally, of course, we need to promote serious money management strategies and money managers, right, with something better than PAM accounts and performance-based structures. I guess from a client perspective, I think, again, talking about the divergence between gaming and financial currency trading, I think you're gonna see this divergence, and you're gonna see clients getting what they actually deserve, right? If you want to gamble, if you want to game, you're going to get low-cost, simple mechanisms to trade with. If you're a high net worth individual and you're looking to trade, you know, with correct methodologies and, you know, accepted financial methods, then you're going to see brokers offering more sophisticated infrastructure, and certainly they're going to use other client retention tools. You know, they're going to buy you a set of tickets for the opera, you know, in your local city. They're going to start really treating you as a value-added client instead of actually just giving you, you know, if you trade over 20 round trips a month, you get another tool for free. You know, those kind of individuals don't want another tool for free. They want to take their wife to the opera. They want to feel like $1 million. They want to go to the baseball game, you know, down the road. You know, that's really what they want to do. And until the FX market reaches that level where, you know, they really, really value high net worth individuals, you know, we are going to see a serious customer retention problem. At the end of the day, you know, I think, again, to talk about gaming versus financial, the reality is that the gaming industry is high volume, low margin. But really, if you look at the industry trends in equities, in futures, the high margins are really, really there to be made from the high net worth individuals depositing a lot of money and actually, you know, trading to actually win, and the broker actually being on the side of their investor. And that's all I have to say. And just one quick advert at the end of our presentation. We've got some new products at AutoChartist. Come see us at our booth. Thank you very much for your time.
Thanks, Ilan.
Thank you.
So my name is Yannick. I'm CEO and co-founder of Tradable, one of the open platforms that have been discussed at this event. And I don't think that there's a much more exciting time to actually be in retail FX that I can remember than right now. If you look at the facts, they are that technologies are changing all around us, creating massive opportunities for doing things differently, doing things better. But I still think our industry has some way to go before we've really started to adopt those trends and technologies. And so I'd like to talk a little bit about that today. We launched in November at the Forex Magnets event and went out to the entire world and said we're doing an open trading platform. This was at the Forex Magnets event in London. And ever since then, we've been talking to countless of brokers, service providers, technology vendors, and we realized that everybody had kind of been waiting, wondering what comes next. Everybody was investing less in the solutions that have gotten to us to where we are today, realizing really that we are at the brink of a new era when it comes to retail FX platform offerings. In the last 30 years or so, there's been a lot of great developments in our industry, and they've really helped shape the industry and get us to where we are today. The interesting thing, though, is that with every sort of new innovation that came along, there's been major pitfalls that have actually helped move us on into sort of the next eras of the platform offerings that we've seen. So examples of that include, in the very, very early days, having phone-based trading. Now, there's a lot of different pitfalls with that, so I'm not going to go too much into depth with those, but one of the very clear ones that there's absolutely no transparency being quoted over the phone, having your broker slip you 20 pips every time you wanted to go into the market, or at least giving the broker the opportunity to do so. And as a result of that, we saw sort of the rise of proprietary trading platforms, which really were now the great pioneers of our industry that helped take trading online and put the entire trading experience online. And of course, improving very much so the latency or the sort of transparency that you had on your trades. And that was a very, very popular thing, obviously. That's kind of why we're here all today. But over time, as that model scaled, it became evident that there were some pitfalls with that model as well. All of these proprietary platforms were developed in-house. A lot of money was spent in research and development and really trying to predict what types of features that customers wanted, which is always a very, very tricky thing. And these platforms were extremely costly to operate back then. Back then, we didn't have the technologies, the cloud computing technologies that we have today. We couldn't just go to Amazon or Equinix and set up a rack somewhere, and we didn't have this broker in a box where you could, as a startup broker, just pay a very little startup fee and get going. And as a result of that, the structure of the industry from a brokerage point of view kind of became one where you had a few large brokers that were doing their own proprietary trading platforms and systems, and they were kind of white labeling those to the smaller and mid-sized brokers because they didn't have the resources to operate their own proprietary trading platforms back then. And that's a model that, again, worked very well right up until the point where the bigger brokers became global brands and really started competing with the smaller and mid-sized brokers. And then you ended up with this kind of conflict that you couldn't really escape, where as a smaller broker, I'm all of a sudden taking a solution from one of my competitors, essentially. And so that kind of pushed us into the next era, which I call the era of the independent tech providers, which really were people that realized, okay, if we as a technology company can deliver a solution where we don't compete with our clientele, that's a model that can potentially scale very, very well. And it did scale very well. It scaled tremendously well. Most trading platforms today are coming from technology providers. Only at least a good bunch of them. But as with the previous generation, once that became successful enough, we started to see pitfalls here. So one of the obvious things is when you have one company delivering platforms for the rest of the world, you obviously have a lot of work to do because people are coming in with new requests, demanding new stuff, and you end up with this huge product backlog where you have to prioritize all your stuff, and that moves very, very slowly. And actually, as a result of that, and I'm tapping a little bit into Andrew's domain now, but that kind of gave birth to this whole third-party industry, which for me is kind of a two-way split. It's the bridge providers and the guys that really help fill in the gaps from the brokerage point of view, such as Andrew, such as Maurer actually, and then it's the other third-party developers that help build trading tools for the clients. And this is kind of where it gets interesting, because initially they began doing indicators and algorithms, and that was all fine. But eventually they ended up trying to alter the user experience so much so that they essentially gone in and tried to build something on top of a platform that fundamentally was never really designed to be a platform like this. It was never really, these platforms were never really designed to be something that people would build stuff on top of, and we've seen a lot of that lately with people hacking different things and trying to come up with all sorts of workarounds to really improve the user experience. And I think ultimately what we end up with today is a peer-to-peer market, which is very fragmented, very scattered, where people are actually selling software to each other, indicators, algorithms, all these kind of tools. And as a trader, I'm buying it from God knows who. My broker, he doesn't even know that I'm actually purchasing software to trade with. He has no control over it, and when the whole thing stops working, I don't really know who to call. I can call the guy on the other end of the world that sold it to him, but chances are he's not picking up the phone. The broker can't help me because he didn't even know that I did it in the first place. And that has, and we've certainly seen that firsthand, resulted in a lot of just really horrible user experiences for a lot of users around the world and for brokers alike. And that kind of brings us to today. And so when we kind of founded Tradable, one of the things that we pondered with and the questions that we ask ourselves is how do we solve these problems that we have today? Because we've seen in the past that that's how you kind of have the whole industry moving on. And I think for us it came down to how do we provide reliable tools to brokers and traders alike? How do we do much better integrations that result in much better user experiences than what we have today? And really, how do we allow service providers and technology providers in the entire community innovate even more and at an even more rapid pace than what they're doing today? And I think at the end of that thought, we realized that it actually came down to changing something very fundamental. Came down to changing the whole model about how we operate with this and really align incentives between the guys that are trying to deliver better trading experiences for brokers and traders, and even the brokers and traders themselves. And the way that we did that in Tradable is by defining a framework where we allow service providers and technology providers to collaborate on building better user experiences through apps that they can put on our platform and we can market together to brokers and traders. And we do that by giving them open APIs, friendly APIs, so we really don't try to limit them in what they're able to do. On the contrary, we want to fuel all that innovation and really help them grow as participants in the market as well. We obviously want to use the latest technology such as cloud computing to ensure that they can spend more of their time innovating and less of their time actually doing maintenance. So, you know, as a guy developing a trading tool, I can integrate it into one place and I don't have to run around changing 40 different installations every time I have a new upgrade on that. And lastly, we created sort of a marketplace in the form of an app store where we could really connect all these traders and brokers, service providers, technology providers, and so forth. So that kind of brings me back to, I mean, the reason why we think this makes sense, actually, looking at the guys down here even, is, you know, in this model, we all get to do what we do best. So Tradable, surely, as a platform, would never go and develop charts the way and trading opportunities the way that Elon is doing and has been doing for 10 years. I think he's doing an amazing job of that. I've even seen some of the stuff in his pipeline. I'm very impressed with that. I'm looking forward to trying it out, actually. We would never go and develop as advanced bridging software as Andrew is doing, because I've heard him speak about his CTO, and he seems a bit of a scary genius. So he spent 10, 15 years on doing that, and why would we ever get into that space? And even with Maurer, who, actually now that I think about Maurer, he's doing a lot of stuff, but whether it's binaries or CRM or whatever it is, that's kind of what Maurer is dreaming about at night and what he's really great at. And And that's not really something we consider our domain. So we figured if we could find a model where everyone in the service provider and technology provider industry can do what they do best, we can collectively help the broker do what he does best, all for the benefit of the client in the end, who we all know in this industry is the ultimate king and decision maker. So going back to my timeline, what is the next era? Well, we believe it's this concept of open platform ecosystems, which is really, it really starts with changing the underlying model and even changing the philosophy about how people are doing things. And that actually kicks off with realizing that service providers and the technology providers, they're not the enemy. Actually, in a lot of cases, they hold the answer to the problems that brokers are having, that traders are having, that they even have between themselves. And I think that if we collectively can come together like this, we can help each other innovate even more, and we can help grow this business even more. So I think, and you can call me naive because I look young, and I am, but sometimes a little bit of naiveness actually goes a long way, because I think the greatest era in our industry actually still lies ahead of us. But only if we can come together and really help each other continue to innovate and really continue to ensure that retail FX get adopted more and more among the general investing community. That was my 50 cents.
My name is Maor Lahav. I'm the co-founder and CEO of Panda Trading Systems. A lot of people in the audience know me, but don't know exactly what I'm doing. Panda Trading Systems is a software house, but I have a slide for it, so we'll wait a second. I'm very excited to be here, I must tell you. All of the panelists that were here with me are partners with Panda. And no one knows about what I'm about to speak with you. I've been working on the project for the last 2 years, personally with 5 developers within our companies, working on this product. I believe that what you will see today is going to make a revolution in the industry. Ilan mentioned the problems, some of them, in the industry that our solution about to solve. But before we'll go into the solution, let me introduce Panda again in a proper manner. Panda is a software house. We offer customized solution to online brokers. We are an integration company and development company. Once a broker have a problem related to trading technology, they come to me. We analyze the needs, and we provide them a solution using our softwares. Now, this is Panda. But before I will show you the top secrets that we've got, Gesundheit, let me share with you a story. Before we founded Panda, a few months before, I was an hedge fund manager. Very successful one, I must say. Running a small hedge fund, $10 million, trading the Israeli stock exchange. How many of you know the Israeli stock exchange? Okay, not a lot. How many know Israel? Okay, that's good. So I was specialized in trading the Israeli stock exchange and specifically the index, the Tel Aviv index. It's a combination of 25 leading stocks in the Israeli stock exchange. And I was very successful. And listen well, I'm going to share with you my secret. And it's working, I can guarantee it. You need to go every morning to the office, open the computers. If you've got 8, it's much better, much preferred. And you need to watch on the screen. You need to look on the index, and after a few years, you know if you need to buy or sell the index. Huge success, I'm promising you. So I was a successful trader until one day I came to click to buy the index, and I had a problem. Someone stole my index. I came to buy the index, and the index disappeared. What do I mean disappear? The price moved. I tried to buy the index, and someone was before me. He took me the price. What do I need to do? I'm a successful hedge fund, and someone is stealing my index again and again, day after day. So I decided, long story short, I decided not to kill myself. I decided to trade the stocks, the component of the index. Whew. It's a problem. In a single click, I need to buy 25 stocks. Very simple. A lot of people in the audience most probably can help me, but it was almost 7 years ago. And within a single click, I need to buy 24 stocks. I talked with a lot of friends in the industry, and they recommended me on a developer that can help me solve the problem. And then I met with a developer, a very nice developer, a bit shy, you know, those developers that they know code, but they are a bit shy. And he gave me the solution. Within 3 days, he gave me an Excel file that in the Excel, within a single click, I could buy all the stocks in the index. And more than that, I got alerts and I got SMSs. It was, for me, it was amazing. It was the best thing that happened to me as an hedge fund manager. It's also affected the performance, by the way. And I was smiling all day long for a few months. But after those months, I took the developer, I told him, let's open a software house. From this moment, I fell in love in developing software in order to solve problems. I didn't know it's going to be a financial problems, but all I knew in life is only financial trading, so we focused on financial trading. After 7 years, we're about to celebrate the 7 year next month. What I'm about to show you right now, it's a secret, I told you, but I never been excited since the moment then when I saw the Excel as I'm excited now when I'm showing you the solution. It's very simple. I believe it will really change the way the industry works with money managers. We mentioned PAM, we mentioned copy, we mentioned following. I think it's amazing. Anyone that I told him said, I never saw something so innovative as what you just showed me. And with all this expectation, I want to introduce you to what I think is going to redefine social trading. Now, what is social trading? There's a lot of people in the audience, like this guy, that is doing social trading. I don't know what is social trading. I just know that we want the ability to be able to track another trader like Larry, and we want to have the same performance as he has exactly. Does the solution that we have today allow us to do it? I don't think so. If you're going to a manager, you need to give him the money. Yes, there are transparency. Today we have a real-time access to our investor accounts, but still, it's not our money. There is the signal. Someone is trading in Tokyo, and then I need to get the signal into my trading account. And I need my broker to approve it, but there is a slippage, and the performance is never the same. And it's always complex. I need to choose the managers. I need to set the different parameters. I need to track them. Suddenly, the company that provides me the social telling me that the manager is no longer exists. So I need to manage my open position. Very, very, very complex solution. So we think there is a better way to do it. Our agenda when we come to solve the solution, the problem was it should be automated. As a software provider, we know that in those days, the brokers, the money managers, the traders, and the investors like to have automation. It should be simple. It should be easy. And more than that, it should be fun, but let's leave it aside for now. And as the regulation come to the picture, and because we are honest people, it should be transparent. No more investing in a money manager He's trading in the account. He's taking 10 pips on the euro. He's making money from the commission. Our account maybe goes by percent. No more. It should be a very simple, very easy, very automated and simple. Mona, can you just go to the next slide? As I mentioned, the existing solutions are never accurate. You never have the same performance, and sometimes even very big difference. It's never simple, and it's not always transparent. Let's go to the next slide. So let me introduce, and I'm really excited because I think that all the 7 years that we've done, and we've done amazing things in Panda. We are the first company to introduce web trading for MT4. Brokers could acquire clients over the web. Trader could access the trading account anywhere in the world. We are the first company to introduce binary with MT4. It was 2 years ago. Now we're speaking about it, but it was 2 years ago. And performance-based contracts is the next best thing. The only thing that changed is that now we can market our services a bit better. We know to do marketing a bit more. And I believe that in the next year, at least 5 of the top 10 brokers, other than offering FX and CFDs on stocks and futures, will start offering a CFD on what we call a PBCs, performance-based contract. What is a performance-based contract? Let me just, we needed to go to Wikipedia and give a proper title. So it's a performance-based contract is a traditional CFD where the underlying asset being traded is the individual trader's performance. The individual professional traders become a tradable asset. I think it's cool. I don't know. We'll go and we'll see an example. But if you want to track someone, you go into the platform, you click buy, and you invested. You can put a stop loss. You can limit your losses. You can put a take profit. If you want to go out, you can get in and get out anytime you want, like you're trading the euro dollar. We are in Panda, short brief, we're in Panda also developing a PAM system, like Ilan mentioned. The problem with the PAM is that if the money manager have open positions and the client wants to go out, he can't. He needs to wait once the manager closed the open positions. Sometimes it's even months before he can get access to his funds. So we are going to change it. The performance, the CFD is priced according to the equity of the trader in real time. Once you're in from the next tick in the system. You are invested, and once you get out, you have the same percentage of growth as the trader made. Very simple. Very simple to explain it to the users. The sales guy is calling, listen, we have a few or a lot selected, let's call them guru, for example. We choose for you the best. You just need to download the platform or do it on the web platform and buy a trader. We're taking the traders and we're making them into an asset. It's a very transparent market. All the data of the account of the trader is published in real time in the web, and you can also see them inside the trading platform. If some of you, anyone know about hedge fund ETFs? Anyone? Okay, it's very similar for a product that's called hedge fund ETF. It's when you can come to your bank and you're telling them, I want to buy the hedge fund. And within your bank account, you are investing in an hedge fund. It's not a real time. It's not always transparent. And in order to have an hedge fund, you need how much? A lot of money. $1 million just for the operation of managing the hedge fund. So we think it's cool. I can come with any size of account, and I can buy the managers. It's simple. I can use the money within the account for margin, for other self-trading products that I'm doing. We think it's cool. Wanna? So let me show you just an example. Right now, we've integrated it into the MT4 because for the last 7 years, more than 65 brokers choose us as their vendor in order to help them with the MT4. So it's integrated to MT4. It's been a secret, but once Yannick will know, it will also going to be in Tradable. So what we see here, Mona, can you take the, can you move it to the, so here what we see, we can see E201. E201 is a GURU. It's a trading account that's tracking the equity in real time. And as you see, it's an asset. I can do a technical analysis on this asset that's been in the market for a while. They've been trading in live account, more than 50K live account. We have all kind of other criteria that we check their maximum drawdown, and we analyze the account in order to understand if they are really a top traders. Of course, we have an operation that always, on an ongoing basis, will track the managers and will filter them. Now, for the broker, simple. Suddenly, instead of just selling for traders, he can sell his services to an investors. But unlike the PAM, it's much more simple and effective way to trade. From a regulator point of view, it's never simple with the regulators. But with the regulators, it's simple because the top traders never hold the funds of the client. He is trading his own account similar to signal trading, but it's very accurate. Everything is real time and it's very simple. So for the broker, he can acquire investors or improve the passive volume of existing traders. For the clients, it's simple, it's cool. They can be a top trader and actually make money from their top performance. And for the investors, again, it's easy, it's simple, it's transparent. They can choose their own broker. It's an asset. You can trade the gold CFD at Saxo, and you can trade the gold CFD at Barclays, if you are institutional, let's say. So it's very simple. I'm very excited. Thank you for listening for my presentation. Anyone have any questions?
Any time for questions at this point? But you do have a booth.
If you want, come to my booth. I'll be happy to explain all the architecture. Thank you.